Get the latest on what's going on this earnings season, meets, beats, and more in Zach's Earnings Scorecard.
Eric Dutram, who heads up our surprise trader service here at Zach's, has been watching the video game makers during this reporting season, and he's going to give us the lowdown on what they've been up to or what to expect from their earnings reports.
Yeah, and you know what? We're looking beyond Pokemon for this this report. We're going to look at some more traditional, I guess, video game companies. First up is Activision Blizzard. This company's been in the news a lot lately thanks to their acquisitions of some esports divisions, and it seems like they're really pushing into that market. The company is expected to see some pretty nice growth numbers, as we'll see in this chart right here. 97% year-over-year growth in sales, 236% growth for earnings estimates. Shares have really been doing quite well here over the last couple weeks and months, and we've seen a pretty decent history in terms of earnings. But in terms of the actual recent earnings estimates, it's been pretty flat. We've seen 37 cents a share for basically the last 2 months. So this could be a company where sort of the growth is built in to their price. And we might not see that good of a report here, but it's really all going to be about the outlook and how this company is going to integrate some of its new purchases and divisions into its long-term growth strategy. The company does have a Zacks rank 3 and a C for its VGM score.
Electronic Arts is another big name in that space.
Yeah, and Electronic Arts, they also have a Zacks rank 3 and a C VGM score, but they have a really great track record when it comes to beating earnings estimates. If we look to the chart here on this name, we can see that the company hasn't missed since mid-2013. So a really great track record, and hey, the stock has been doing really well too. We can see shares have gone from about $25 a share up into the $78 range. So it's going to be a question of, can Electronic Arts really keep up this strong growth path? I always hate to bet against the companies when they've had such a great streak of beating earnings estimates, and I'm not going to start with Electronic Arts.
Okay, probably a wise move on your part. Zynga?
Yeah, Zynga. This company, has really had its heyday 5-6 years ago, back with some of their more Facebook-oriented games, and it's really had a lot of trouble living up to that hype and expectation again. If we look at this 5-year chart, we can see exactly what I'm talking about. Shares were about $15 a share in mid-2012, but since then they've really fallen off a cliff here, and they're down in this $2 to $4 range. And this is despite a great history of earnings beats since then. They just can't really seem to get any lift out of their business model and their current lineup of games. So this is going to be a dicier one. It does have a Zacks rank 3 and an F for its VGM score. So even despite the share price weakness, it's been a very bad performer. It's just not a whole lot to like, especially when there's so many other names in this video game space. And we're seeing some new entrants that are really becoming a lot more promising. So this might be one to continue to avoid, even though it does have a great track record in earnings season.
All right, nothing about Pokemon Go, huh?
No, sorry. I know you're a big fan. Yeah.
I'm disappointed. And when you said Lyft a moment ago, I thought you were going to segue into the driving, car driving services or something. Almost threw me. Do you own any of those?
I do not.
All right. Check out more information on our website. It's all there for you 24/7. Zacks.com is the place to go if you're not there already watching this video. With Eric, I'm Terry Ruffalo.